36% very green, 32% green. That is 68% green to very green, 25% flattish. That is 93% flattish to very green, 4% red, 3% very red. Thank you everyone for your votes. Fix this up here. All right, we're going to talk a little bit about wedges today and predicting, more referring here to the United Therapeutics. And again, it's a very slow day. G Pro calls overnight were very good. Those things are working even better right now if you manage to hold them. FireEye, I could have done a much better job on. Got rid of that today. Sort of frustrating with that FireEye. Watching the move happen and calling it correctly and really not getting that full reward that you felt you deserved for it. Definitely felt that way to me on FireEye. And from that perspective, it was a little disappointing. You know, it took a few days of this FireEye just to have the calls double. I mean, barely double. This is what you needed on the daily for FireEye to do it. We bought it Tuesday. We watched it go up Wednesday. We watched it gap and hold up Thursday. We watched it go up today. You have to hold that for a longer amount of times to get your calls to double, unlike the G Pro 50s, which decided to double almost instantaneously this morning. And, you know, lo and behold, you would have made a lot more with that in a similar position than hold it equally, let's say, or even more than holding 4 days of FireEye move. So we're going to talk a little about wedges today, and again, today will be an open forum, which means anybody is allowed to ask any questions they would like, anything they want to share, anything they want to ask. But I'm going to start it off with wedges, and then you guys may ask any questions you'd like. You can make sure, you know, write them down, whatever you'd like to do. And we're talking about the falling wedge here in United Therapeutics, and then, you know, I wasn't really talking about it for a while. I was down a little bit of money in it. And then I made the call basically right over there that we were going to resolve. And the next 5-minute bar was that resolution candle, which we accurately predicted. And that's what I like to call an algorithmic move, where the boxes are forced to resolve the pattern based on the setup. And when looking for a falling wedge, I want to show you the information that was available to me. So I'm going to pretend these other 5-minute bars didn't exist. And right there on your screen right now, this was the 5-minute situation for me. So you saw you had a bunch of big green bars. That's the bull flagpole. And then you got this wedge where the bars were ticking and you were trying to discover where to draw a wedge. Truth was, you know, there was many ways to start drawing this. You could have started with this candle right here, right? That would have touched the bottom of these 5-minute bars. You could have done this candle here. And if you realize, what you're going to realize is you could have bought off any one of these lines you drew. This is the beauty. Here's the problem with drawing this. It's a very sharp candle, but check that out. The fact that this second 5-minute red bar right here, if you want to follow along, I mean, you could look, and I'll make it very big for you guys so it's easy to see. I mean, we're talking right now about the 1135 to 1140 United Therapeutics candle. Let's say you wanted to start, you know, your wedge. It's hard to draw. It's not letting me do it. Hold on. We talked about, you know, I'm just going to state that it's one of my methodologies that you don't really want to start at the top of the flagpole when drawing your wedge, because the flagpole is never really part of the wedge. So you could have basically drawn this off this 1135 to 1140 bar. Let's say this was all your information right now. Let's say that's all the information we had, right? Just like we had from 11:30 to 11:35, you could already see the wedge getting tighter. And if you simply went to the next 5 minute bar, you would have seen that that was actually a small resolution point here. So United Therapeutics did actually have a small resolution at 11:40 to 11:45. You see that? And the low of that candle is 112.94. So what does my methodology state? On that candle, you could hold United Therapeutics long versus 112.93, or 1 penny below the 5 minute bar right there. Very next candle, you were rewarded as the stock spiked up, pulled back in again, and then started digesting. So as you continue to draw more candles, you would have noticed the following. As you drew more lines, you would notice that the resolution point for the zenith would have been at 12:10 to 12:15 because that's where the support and resistance converge. The stock pulled down, digested, and then popped up. On the candle that popped up, the low of that candle was 113, meaning that, excuse me, the low of that candle was 113.01, meaning you could have put in a stop a penny below that level at $113. Had you held that, you would have experienced. Now, here's the key for your conviction. You spiked up initially, and then you pulled back. That shows that you drew the chart correctly. That shows that you drew your wedge correctly as well. And using this, we can actually predict again where the volume has to elevate. And take a look at that. According to this chart, between 1:55 and 2 o'clock, you will get a resolution here on Uther. Now, it could pull back. There's a chance it pulls back towards this support line. But check that out. It should be the candle after. I apologize. It should be 2 o'clock to 2:05. By that candle, you're going to have a forced resolution, which means in English, if for whatever reason you don't start resolving, and you'll know when you resolve, it'll become very obvious. If you don't start resolving now by 2:05, based on the updated parameters in which we can draw based on what we see, United Therapeutics, from an algorithmic perspective, would be forced to resolve on the 5 minute. Now, 5 minute, that could be a few dollar move. It could be a retest of day highs. They could pull it down and show the resolution failed. But what it does give you is it gives you an idea on the timing of your positions, the risk on your positions, and how to potentially capitalize on such a situation as well. So that is my piece on wedges. If anybody has any questions on wedges, or you may ask any single other question you would like. So check this out. This Uther now you're getting excited about, even this small wedge formation here doesn't show that resolution is imminent in this range. So actually you're probably going to get caught in a grind, at least for the moment being, in a United Therapeutics now. But by 2:05, this 5 minute will resolve, this 5 minute formation. Does anyone have any questions about what I just went over? How you could predict the timing of algorithmic breakouts? When to include and exclude the tails? All right. When you want to include, you want to try to include a tail always. And this is the easiest way to figure it out, I think, that I could explain it. You want to try to include them always. However, if you can touch a lot more candlestick tops by cutting a line, then you should do it. Then you should just say, all right, It broke descending resistance, for example, if you're drawing a line, and then it pulled back in. So that, especially if you see high volume right at that point where it hit. So, when it went through your resistance level, Lou, did you have a high volume right at that point? If your answer is yes, then you could literally cut it through where that high volume should have been. You understand? Descending wedge, yes, that is descending wedge, or same word for it, Federico, is a falling wedge. And I interpret that very bullishly. So do the algorithms. So indeed, that is a descending wedge off of a bull flagpole. That's why it was very bullish here. Candy at 11:30, descending wedge. Um, sure. However, that's not your highest conviction wedge. This is. And it shows that you're resolving negatively now. I would look for Candy to come potentially all the way back down to day lows. There is nothing strong on this Candy right now. Even though at 11:30, like you pointed out, you broke through the wedge resistance here. You could see right there at 12 o'clock. And that's when you started drifting up, meaning you could have had a stop at 1769 after 12 o'clock, wherever you bought it. And if you did that, you would still be in the trade right now. Stock went up to 1808. So for United Therapeutics on, let's say, this current 5-minute formation right now would need to break 116.64 to break out. So right here's your resistance level on United Therapeutics. It could resolve earlier than 205, keep in mind. It's just that 205 would be a maximum resolution time right now for United Therapeutics. Does anyone have any questions, anything they would like to discuss on this extremely slow Friday? Let's talk about Criteo. Okay, now you have this Criteo. So at this point, you knew you were going to resolve by 1 to 105, right? As the wedge was forming. Let's say you missed the down move, you missed the up move, and it just starts digesting. What I'm telling you, Lou, is by 12:55, the close of this 12:50 candle on the 5-minute, you were already able to tell that the maximum resolution time would have been by 105. That's a bear flag with a rising wedge, and it was a bearish formation, but the bearish formation broke up. Why? I mean, look at the market we're in. Then again, I don't know the news on this stock. Did they announce something that people thought was bad and then realized wasn't bad? I mean, let's take a look. What happened with CRTO today? Um, yeah, you see, so I was exactly right because there was a report out that it's going to present at Citi's technology conference as planned, and said it does not comment on rumors or speculations. There was a talk that Publicis was in talks to buy them was unfounded, and that's why that came out, on Fly by 12:40. So that's exactly the candle that broke down. and the company came out at 118, 3 minutes after we started this webcast, and said they don't comment on rumors or speculation. So that's a bear flag that was based on news with the news getting reversed. And that is probably the most likely situation why this bear flag rising wedge failed. And I look at information like this and there's just too much unknown right now in the stock. I would ignore it, but from technical perspective, um, you put in a bear flag with a rising wedge, and it was based off news that was later, denied by the entire company. So that's a very rough example in a rare situation that you wouldn't have been part of anyway because of the news that's out there. It's not like they had negative news and the stock fell and that negative news stuck and stayed. It was you had negative news and company says there is no negative news. So it's trying to retrace back to the levels in which it fell from. My target, 36.89.